Baytex Energy reported earnings today. Let's see how things shook out. Bloomberg's equities reporter Stephanie Hughes joins us with more on that. Stephanie, how did the stock do today?
Hello, Marilla. Yeah, so the stock didn't do very well today. Shares were down by over 8% at its lowest point today for the oil and gas company. And that's extending a three-day losing streak that brought the stock price down to levels that we haven't seen since September 2022 there. And it's mostly an earnings and outlook story like you alluded to after TD Cowen said that Baytex, their production is expected to average around 144,000 barrels of oil equivalent a day, which could be a touch light due to unplanned weather conditions that really forced some downtime at some of the facilities there. But beyond earnings, they're also really being hit by that drop in crude oil prices. That's really not helping matters either. Oil prices dropped to its lowest level in over 3 years after Trump's tariffs hammered the outlook for demand. And on top of that, OPEC Plus suggested that it was ready to start opening some supply taps there. So oil has been on the downward trend since mid-January on Trump's trade policies and given the lackluster demand environment that we're seeing right now. Now, that said, other analysts have been largely characterizing the quarter as somewhat solid, actually. So BMO Capital Markets said some of the top plays in Canada was the Clearwater project, where they said Baytex continues to shine there. They added, however, that due to the higher leverage and the highly volatile environment, they cut the price targets somewhat, and they weren't the only ones to do so. A few analysts also cut their price targets there. So even though analysts say or can agree that this is somewhat of a stronger quarter, it seems like the broader environment is weighing on the shares there as well.
Got it. All right. Let's talk about Bombardier as well. What's happening there?
Yeah. Story with Bombardier. So the shares of the private jet maker are soaring by over 11% at its highest point today. That's the biggest gain since last May, and it's emerging as this top pick as a defense sector play. Analysts at TD Cowen estimated that Bombardier's defense segment, which has a fleet of jets for missions like humanitarian missions and transporting politicians and heads of state. So they expect that segment will significantly outgrow the mid-single-digit pace of industry growth there. They also added that they believe there's a case to be made that Bombardier's share price could surpass $300 per share Canadian by the end of 2029 from the near $90 it sits at right now. So that's quite a bit of a jump there by 2029. They also expect that the company's margin expansion will be based on an increasingly diversified revenue stream and its economically resilient defense aircraft and modification revenue. That said, the big caveat here is that their thesis and bullish view won't really happen until the markets are convinced that tariffs will be eliminated. So there really still is that tariff overhang there on orders and earnings for Bombardier. But for the meantime, it seems like we're seeing a pump up in price in the share price there, Marilla. Okay,
so just to clarify, they're expecting it to go to perhaps $300 by 2029, and that's because it's expecting to diversify more?
Diversify more with the defense segment. It seems like it's really the defense sector that's expected to help with the heavy lifting there. But like I mentioned, the caveat there is that the tariffs need to, we need to be past the tariff story. We need to be past that headwind there. So they kind of, like, it seems like it was even a lofty goal for them, but they said that there could be the case there. So they're softly saying that it could reach over $300.
But they too are facing that overhang, as you mentioned, of the uncertainty of the tariffs because they change.
Exactly.
They change almost every day.
Right, and they've got supply chains that are based in the U.S., based in Mexico, so they are an industrials company that's quite sensitive to the whims of tariffs there, Marilla.
Got it. All right, CTV, Bloomberg, excuse me, Stephanie Hughes in the newsroom. Thanks for that.